I haven't done a pre-market drill down for a while. I don't, you should know this by now. TLT is the snitch. Um, was told that by a really cool player, trader out of California named Chad. Anyways, Chad under the table paid for a winery with cash. Yeah, I guess so, man. TLT's the snitch. The British markets are strong. We can actually go look at them since we're doing what we need to do here. Um, just a quick peek, and there's the German counterpart. Okay, the forex definitely indicates that the dollar is stronger, getting stronger against the euro. So 20 years strong, pre-markets looking strong. So I'm looking for liquidity is going to go into the Nasdaq, specifically in the subprime bond market, um, which should drag the other indexes away from that nice pre-market look. Personally, um, I'm not too worried about it as a whole. As far as my stock account calculator here, it's only showing it movement in a 20-year um, with our Fakashi 69 snitch boy. Just trying to add some simple stuff here because I want this to be extremely short and to the point. Um, so I expect the Nasdaq to recover. It's got a lot of energy coming its way, a lot of velocity. Um, let's roll over to financials. The zombie banks. This will be a telltale sign. They're all blown up on pre. Um, Credit Suisse, he looks good. Little momentum in the pre-market. Look for some moves in gold to the upside. Let's take a look at my next play. MFC, yeah, to the upside as well. Okay, imagine this: the stock market the stock market being up, being a problem. Yeah, definitely. That's how I'm gonna start. It's a narrative I'm gonna begin to create. The stock market going higher and higher is a problem for acquisition. Obviously, I want to get in at the lowest price possible for new opening up new trade ideas. Um, My liquidity doesn't clear escrow until the 17th. Great. Let it go high today. Tomorrow, let my numbers look good. And then by the time it's time to my deposit clears escrow, it'll go down by then. So I'm not complaining too much. HDFC being down in the, well, it's not even in pre-trading. So I'm not even gonna say anything about that, and that's because it's in a different currency regime. Everything that's in the pre right now is in the USD Euro currency regime right now, and then we have the pre-market after closing. These particular stocks will not be included in that pre-market, but the stocks that are in the Japanese yen, USD, CNY, renminbi, currency sphere of the world will be in the closing pre-market after the U.S. markets close. Yeah. As far as financials are concerned, mind you, and we'll fly over to my next trade to complete this whole series, this whole idea. Which we're up in the pre for my next move. We'll take a run here. Take a look at the Dixie. I don't know if it's going to. I'm going to start using USD against the price of gold. I got to find out a way to represent that. I think that's the direction we're going. USD, Japanese yen, USD, euro. What we need to be looking at is USD gold price. Since half of the world is going back to gold back trading. And the dollar is definitely up. Was that showing me pre-market action? No, it was going up at the end of trading. So there's no pre-market action here. We can go to the Forex and we'll see. So the U.S. dollar is increasing against the world of currencies, the world of fiat. And the physical gold isn't really the deal here. It's the paper contract price of gold. It's really was not expecting to do this today. It's a one day. I think I remember February we had insane, awesome gains. This is the 1st of February here where gold paper contracts, which is the market price for the gold, spiked when the dollar hit a negative 0.85 hundredths. I'm looking at here. 999 off of the price of that at that time. So negative 8.5 from what price is what we wanted to see. SGOL was up 9.43 and the dollar was down negative 2.34. 682468. That's times 3. 6 times 4. Only question is, where was the dollar at that time? Right. Where was the dollar at this moment? Zero, 1, 2, 3, 0, 2, 0, 4 that week in January, early January. It's at 91.11. Hold on, let's get that right. 91.55. 92.41. This is my take on what's going to happen today. The influx of liquidity is going to drive the dollar back down in the market, in the three markets, mainly the Nasdaq. TLT is telling it on the 20th. And basic to it, the basics is just there. It's going to take more dollars to acquire these shares of stock, even in the support range. I'm showing you the proof there. I'm in support. Support is higher. So in order to support the market, it's going to take more and more dollars, which will drive the dollar lower. The 20-year yield is telling us this. I'm not even going to go to the 10-year yield because it's soon enough. It's not going to be an indicator because it's been. What happened at this last bond auction was China was not permitted to be involved in the cache of currencies that are going to make up this midterm recovery. So they dumped a couple $1 trillion in treasuries, which was bought up by the Fed because there was no movement at all in the 10-year yield. That's what happened last week. I'm going to leave you there. I'm pretty sure everybody else can read in between the lines. This is Jonathan Williams, Stock Review. Please like, share, subscribe. Appreciate it.